Hey, what's up guys? Today I'm going to be helping you all out and reviewing and breaking down how I had an edge over the market for the last 4 years now to get winning trades consistently like you see right here on an AMP live account. No demo, no prop firms, none of those shenanigans. And I'm 6 years into trading now, guys. Years and years and years of learning all these complicated strategies, learning 100 different ICT PD arrays, looking at all these gurus flashing their profits on the screen. Just years later, all this time, just to realize that all I needed was one simple, very simple, proven, backed by data system to have true, consistent, long-term success inside of this business. So today I'm going to be breaking this down for you guys so that way I can point you in the correct direction and not just be like all the other gurus that just resell, repackage, and give you useless nonsense information. So now that we had that out of the way, we're going to dive into this, man. And I want to tell you guys, I did start a small 5K live account challenge with my Discord about 5 months ago. And all I got to say is we're on a really, really good path to get to $100,000. So go in the comment section. Let me know what you guys think the account balance is right now. I'm going to be reviewing it by 2026. So that's also going to be fun. But anyway, no more rambling on here. Let's give you guys all the ins and outs. So the first thing that you guys need to realize, don't even think about the charts right now. Don't even look at the candlesticks. Just look at me for a second. Do not overcomplicate the markets. I promise you, sounding smart and having all these different terminologies and, oh, I'm a smart money market maker trader, all this stuff, guys, it's not going to make you money. What's going to make you money is collecting data relentlessly on one simple repeating phenomenon in the market. This is not gambling, guys. For 95% of traders, it is gambling. But what I'm showing you here actually has a real edge over the market because I've collected data years and years and years worth of it, proven that this very thing repeats over and over and over again. But here's the catch. Here is the catch, guys. It sounds so great and glorious, but what it really comes down to is what you do as a trader when the model is not showing its hand. Can you go 2-3 days in a row without taking a trade if it doesn't show its hand? Or are you going to gamble on a random fair value gap and then end up getting into drawdown, going on tilt, whatever else? Have you been here before? I'm sure you have if you're watching this video. So engraving that and drilling that into your mind first, and then looking at what I'm going to show you here, this is how you're going to most effectively trade what I'm going to show you guys here. All right. So we're going to dive into step number one, guys. Very, very simple. Step number one, identify a higher time frame key level. You probably heard this before. Very, very simple. Every single one of your high quality trades should be derived from a higher time frame key level in the form of old weekly lows. This can be an old weekly low, an old daily low, and also an inefficiency in the market. So let me give you an example. Let's say here in October, you wanted to frame longs, and here you go. Here's a weekly imbalance. You can see how it tapped into that, and I'm sure there's really, really good opportunities in that. So as long as you have one of the two, guys, an imbalance in the form of a fair value gap on the weekly, daily, 4-hour, or 1-hour chart, okay, or an old weekly, daily low. In this case, very, very simple. We drove down and we swept an old weekly low. This is when I begin to look and speculate potential long opportunities. But that's only if we have this one thing, which leads me into step number two. Again, guys, if you're already head spinning, just relax, take a deep breath. Please do not overcomplicate it because profitable trading is not complicated, guys. Okay, the complicated part is staying disciplined and on your pivot, man, staying sharp, and doing what you need to do in terms of, patiently waiting for that setup to perform and assertively strike when it does perform. Okay? Step number two. Why did I draw a line right here? Take a look at this. This is your obvious double top in the market. See that? Price created the swing high here, and then it created another swing high matching this old high here, dropping off, cementing this as clean, smooth, relatively equal highs. Price drives down and then ultimately taps into that key level, leaving all this open. Not only do we have that double top, but even better, we have a trend line phenomenon generated in the market here. We have a high generated here. We have another lower high, lower high, lower high, and then it drops into that weekly key low. So when we're dropping into the weekly key low, that's step number one, right? But whenever this is combined with an opposing obvious pool of buy-side liquidity, right, opposing buy stops from people that were selling, this is a very powerful combination. The only time I'm looking to trade the market, guys, is when we have a really obvious opposing pool of liquidity. If there's not an obvious opposing pool of liquidity, very, very likely that I'm not going to engage with the market. Simple. I don't care what anybody says. If I only take 2 trades on the week, so be it. I'm going to make those 2 trades count in a manner that I can pay my bills. Just so happened here today, we had a trend line and a double top. That's bread and butter, man. Higher time frame key level tap plus obvious draw on liquidity, which is going to be solidified as a Model 3 target, which I will not get into the specifics on this video. And if you want to learn more, you'll have to get into the Discord, invest your time and energy inside of there. But I'm not going to be giving it out for free on YouTube, guys. Sorry, not sorry. So we made it to step number 2, guys. Now the third step, and really, really crucial step and piece of this puzzle here, is the overall order flow and the market structure on these 2 time frames right here. That is it. Don't worry about your 4 hour. Don't worry about the 5 minute, the 1 hour, and the 15-minute time frame. I look at the hourly time frame here first. There's 2 things that I'm considering. Number 1, are there a lot of wicks? And the reason why I look for this is because I do not want to engage with the ultra manipulated market in the form of lots of wicks back and forth. I want to see solid body candles, and we see that right here. Solid body candle, solid body candle, solid body candle, followed by another solid body candle. That tells me we have a smooth, assertive, to the point, clean market structure and order flow in the market. Now I scale onto the 15-minute. I ask myself the same question. Are there a lot of wicks? The answer is no. We have our original manipulation wick, but is it smashing back and forth past that? No. Direct to the point, and we have an obvious light bulb expansion in the direction of that obvious pool of opposing liquidity. That's what I want to see. I want to see a smooth, assertive, undeniable market structure and order flow that's in the direction of that obvious draw. Period. Very, very simple. So as you can see on the 15-minute chart, not a lot of wicks. A lot of solid body candles, direct to the point, very smooth, very pleasing to look at. And then my second question is there a clear CISD? And CISD is just short for change in the state of delivery. I know it sounds fancy, but it's really not that complicated. Are there clear changes in the state of delivery? Meaning really 2 things. Are we blasting through opposing arrays? And are we shifting above down candle formation? So as you can see here, really I'm just looking at New York, guys. Okay, so whenever the market opens at 9:30, that's when I begin to start looking for my setup. So post 9:30, what was the first down candle that formed on this 15-minute chart? Here you go. Did we create this down candle and then keep dropping off? Nope. Take a look what happened, guys. Created this down candle, which is your natural retrace before we continue higher in a bullish market. Simple stuff, 101, right? But we immediately, boom, snap right above that with aggression, changing our state and delivery. Plain and simple. Changing our state and delivery, light bulb phenomenon, and we blasted through opposing arrays. Just look at this 15-minute gap. This is the one that pops out to me the most. We smash through it with aggression, create that down candle, and then we have that change in the state of delivery. So these 2 questions are checked off for me easily. There's a clear change in the state of delivery. There's not a lot of wicks. It's a smooth order flow market in, again, the direction of the draw on liquidity. This is the only time, guys. These 3 steps that I just gave you, high time frame key level, obvious opposing draw on liquidity, and then looking at order flow market structure from the hourly 15-minute time frame. This is the only time I will drop down to this 1-minute chart and then take my entries, because 99.9% of my entries are on that 1-minute chart, but only if I have all of this narrative and context, key context, that I'm showing and laying out to you guys right now. That's the only time. And this gives me the ultimate edge in the market. And again, I won't get into very specific stuff because that's exclusive to the Discord. But this is the general outline, guys. This is how I know when to engage with a high probability market versus a low quality market. If it's a low quality market, guess what? There's going to be a lot of wicking back and forth, a lot of manipulation. There's not going to be clear changes in the state of delivery. There's not going to be obvious pools of liquidity like this, right? None of that stuff. But what I laid out to you here, just keep this in mind, because then you're not going to be gambling on the 1 minute chart. You're not going to trade some random fair value gaps and pray that they work out. You start praying to the market makers. It's not going to work, guys. If you don't have a true edge over the market, you will continuously be in the never-ending loop of making money, giving right back, making money, giving it right back, making money, giving it right back, blowing your evals, blowing your funded, getting a payout here and there, but you're never really breaking a true consistent profit. That all changes if you apply what I taught to you here today. All right? So I hope you guys found some useful and insightfulness out of this. If you want more, just please hit that like button, comment. That lets me know that you're engaged with this and want to, genuinely want to learn more from a verified trader that's been doing this for 6 years now. So until next time, guys, God bless. Take care. See you in the next one, all right?